And we are off. My name is Zach Anderson Pettet, VP of Fintech Strategy here at Money 2020. Welcome to Everything is Fintech. We got two wonderful and exciting guests here this morning, my time. But it's not morning for them because this is an international show, and that's just how we do things. We don't allow only one time zone. We must have at least two. We prefer three. And in this conversation, we have three. So let's get to these fascinating individuals. Tim, Swapnil, welcome to the show. Let's explain to the folks who you guys are. Tim, since I'm just looking directly at you, I'm going to have you go first. Tim, who are you? What do you do? Give us a little bit of the Tim story.
Well, thank you, Zach, and thank you so much for hosting us today. It's a real privilege to be here. My name is Tim Moncrieff. I look after some of our longer-term strategic growth activities at Visa, focused on the work that we do beyond our core consumer card business. So the work that we're doing in cross-border money movement and the capabilities that we have around there. I spent about 15 years or so in this space, starting out in consulting, then working in the fintech industry in capital markets, and then I've been at Visa for the last 5 or so years, I think. But it's great to be here.
I love it. It's good to have you. Swapnil, who are you? Well, actually, Tim, one more thing. What time zone are you on? I made a really big deal out of it, so now we got to talk about it.
I'm the lucky one in the room, I think, here, because it's coming up to 2 p.m. I'm in the middle of the time zone between you guys, so I'm over in the UK.
So you're having your tea. I'm chugging coffee at 7:30 a.m. And Swapnil, you just took some melatonin. Where to us?
It's Friday evening, and guess what? I'm doing a podcast.
Woo! That's Visa directly a party is what that is.
Yeah, great to be here, Zach. It's a privilege, as Tim said. So thank you for hosting us. So my name is Swapnil Mhasde, based in Singapore, and I look after our Visa Direct money movement, commercialization strategy, and product solutions. So it's a very much go-to-market function, making sure that we are able to tap into various segments and use cases with our money movement capabilities. So great to be here to give you a flavor of Asia Pacific today.
Love it. So you guys both, I would say, work on a very, what a lot of people assume to be a very uninteresting field. We just did this call for content video for the USA. And one of the things in it that I actually wrote in the script, I don't know if it actually made it to the video, was basically that when I started in fintech about 10 years ago, I thought payments generally were kind of where fun went to die. Sorry, guys. But now, fast forward 10 years, and you think about RTP, you think about, honestly, I think it's always been fascinating. I just haven't understood the layers of it. But now you look at a lot of what's kind of going on in the world, and now it seems like payments is already like bringing the sexy back to fintech. I'm curious if you guys have kind of felt that similar sort of thing with the technology that's coming up and sort of that just like the vibe shift a little bit, or if it's just like always been interesting to you guys. And also just curious kind of your thoughts on the industry generally there.
Zach, it's you'll hit the nail on the head, I think. I'm not sure how many people wake up in the morning or kind of are born and think they want to have a career in payments, but what an exciting time to be in this industry. And I think we've seen more change in the last 5 years than we've seen in the last 50 years. And I qualify that by the fact that my kids, who are, sort of 6, 8 and 11, ask me about what I do every day, and they seem genuinely interested, which is definitely not the case of where this world would be, I think, in the world of payments just a few years ago. But I think it's a super sexy area.
What kind of questions do they ask you? Are they like, how's settlement going, Dad?
Yeah, and I think they're just obsessed by a bit of money, actually, and they want to get access on. They want to get their hands on the cards and saving money and spending money. But it's a dynamic market, and it's changing so much and growing every single day. I guess it was only 10 years ago that really payments was dominated by the big banks, and the plethora and range of fintechs and payment service providers and networks and other competitors that have come into the market, as well as governments and domestic RTP, real-time payment networks, as you said, has just changed the dynamic in a really, really exciting and good way.
Yeah, definitely. So I know, what's your perspective from the APAC side? How's the vibe on the APAC side of things?
I would definitely echo what Tim said. So I spent 18 years in the payment industry, and 10 years or 15 years ago, people were like, what do you exactly do in payments? What is it, right? But today, everyone is so excited about payments, and I think it's all about like making payments invisible, right? That's what is happening today, and everybody's so curious about the technologies, what's driving it, what is all this like cryptocurrency coming into play, what is stable coins. So I can definitely echo, as Tim said, that this is a growing and interesting space. More and more, you can see that is really powering economies, right? It's kind of playing a big role in the digitization of everything. Your entertainment, your government boring tax-related filings, your regular payments, making e-commerce easy. So it's really playing a very pivotal role in kind of enabling across various industries. So that's the exciting part of it. And guess what? We are still on the journey where there's continuous innovation. We can't even say that we have reached like the peak and that's it, right? It continues to evolve and gets better. So it's a very
Yeah, I mean,
exciting space.
this combination of AI, RTP, I'll just call it digital asset infrastructure, however you want to take that. I mean, there's a lot of terms for that. I know you're a member of the CBDC Technology Forum, I want to say, from the Bank of England time. Yeah. So,
Yeah.
I mean, just CBDCs in and of themselves, stablecoins, all of these different things, right? I mean, to your point, Swapnil, the idea of it's actually fascinating, right? It's kind of like this. I don't know if bell curve's really the right way to think about it, almost like an inverse, but like us nerds get this opportunity to dive into the most fascinating technology that has ever existed in payments. And then consumers, to your point, Swapnil, actually get a wonderful, invisible, fraud proofish experience, right? That is completely, I mean, it's fascinating how we are getting deeper into the weeds and consumers are being lifted out of the weeds at the same time. Just that flywheel seems to be turning in a very interesting direction. Tim, I'm curious about your membership on that technology forum. What kind of that encompasses and how that kind of interlaps with your day-to-day job.
Well, yeah. So I mean, it was a personal invitation actually to participate in the Bank of England CBDC Technology Forum, and actually we've largely concluded that phase of work. But it's a collection of individuals across the industry in the UK who've been partnering with the Bank of England to help to inform and think through what the role of a central bank digital currency could be in the UK. And I've actually been doing that alongside a few other industry initiatives that we've been pushing in this similar space. I mean, the reflection here is that the crypto boom, I suppose, and the emergence of Bitcoin all those years ago really demonstrated how technology could be applied to enable true peer-to-peer payments. But of course, in that crypto space, there are loads of deficiencies and challenges of applying that into the regulated world. And so some of the work that we were doing in the Bank of England's CBDC Technology Forum, as well as, from an industry, a private sector perspective, with projects like the Regulated Liability Network, which is a collection of banks and networks and payment providers in the UK, and the Regulated Settlement Network in the US doing the same thing. And then more recently, Project Agora, which is led by the BIS, has really been exploring and getting into the weeds of how that technology that could enable that true peer-to-peer infrastructure could be applied in a safe and secure and trusted environment within the regulated industry, principally on regulated instruments and regulated fiat currencies. So it's been super exciting. It's a rapidly evolving world, and I think the progress that is come through on the crypto side, and then more recently, the massive strides forward in regulated stablecoins has really started to hold the regulated industry, the more traditional industry, I should say, to account on what the future could look like.
Do you see that unfolding? I mean, I'm curious, Swapnil, from your perspective in APAC as well, just how this kind of world of, I mean, this idea that it's almost like if the dollar was printed by a private company, right? I don't even know if that's a really good analogy, but it's not too far off, I don't think. And the idea that the US Treasury and this private company would need to work together to manage the value of that thing. It's a fascinating concept. So I'm curious how you see it unfolding, not how you think, but how you see it unfolding in the next like 5 to 20 years. Just give you a really broad time frame for both of you.
Yeah, Zach. So that's a very interesting area. I think firstly, Visa as one of the industry leaders in the payment space, ultimately we are looking at solving the problems that have always been there in payments, which is all about ease, acceptance, making sure that it is secure, right? And that's really the job for us as a network. And we're always looking out for various technologies that will give us that and improve, right, that offering. So when it comes to crypto, stablecoin, we are listening to our clients. We are watching this space closely. As Tim also said, we are part of various forums. We are giving guidance and consultation, playing that role as a network. Ultimately, any technology which enables that seamless commerce, payments, large value, small value, increases the entire proposition from digitization perspective, speed of payments perspective is an interesting area for us. I would say that in Asia Pacific as well, there is now a very increasing demand of solutions when it comes for crypto, when it comes to stable coins. And we've started to offer select use cases using our own network. So for example, on-ramp, off-ramp of crypto wallets is a growing use case for us. You can see like almost after the crypto winter, it's again back thanks to some of the things that are happening in the US. So it's all fueling back and it's coming into mainstream use cases. So our job is really to make sure that based on our client needs, based on the regulatory frameworks, we are able to then be able to offer that. So we're getting into that space. We have live programs and use cases today. We are partnering with certain wallet providers like Coinbase, for example, where you can use card credentials to be able to buy digital assets and also cash out from them. So all this is within the approved license framework of the government. And we're also now looking at beyond card, right? So there are a lot of use cases coming around moving stable coins, using stable coins as funding sources for transactions. So this is a growing area for us. There are some solutions we are offering and we will evolve, as the space evolves.
Yeah.
Curious on your perspective, Tim. And then I have another question, which is basically just how do you guys actually stay close to your customers with this? It sounds like it would be hard to take feedback and then get to, oh yeah, we should go partner with Coinbase on a wallet. Like I imagine there's a lot of you take feedback and then you have to filter it through your understanding of the industry and then you go do a thing that they might not have even asked you to do. It's almost fintech jobsy or something. I don't know.
Yeah, no, you're spot on. I think trying to stay ahead of the dynamics and evolve our role is foundational to what we've tried to do over the last few years. I think we've done a good job of that, but it's definitely getting a lot harder and a lot more complicated. And those dynamics are coming out. And as Swapnil said, I think those customer expectations are changing a lot. But I suppose what I'm seeing is that this industry, particularly in cross-border payments, is growing exponentially. I think it was sort of around 150 trillion of value exchanged each year only 5 or 6 years ago, and it's now close to double that. And so there's huge demand coming. The second thing I'd say is that there's enormous demand for better experiences, not only from consumers, but what I would term the consumerization of institutional payments, which is where businesses and governments are starting to expect that same level of experience that they're getting in their personal lives at work. And that really boils down to the expectation that things will be immediate, they'll be fuss-free, and they'll be easily accessible end to end. And that's really driving a focus there. And then, of course, we've got the next dynamic, which is the regulatory pressures. So the financial stability boards laying out their really compelling imperatives on cost and speed and transparency and access. But you asked about how I see some of those technologies unfolding. And my view is that those technologies have got a huge role to play on the back end wiring and plumbing that we all rely on for cross-border payments. So the customers end to end are expecting and demanding faster and more real-time and better experiences. But if we actually look at what's changed in the industry, you could argue that very little has changed when it comes to the underlying movement of value across borders. We had the fantastic innovation of continuous linked settlement in 2002 that now does tens of trillions of dollars of value exchange a day. But it hasn't really changed enormously over 20 years. It does an incredible job on compression, but it really moves money in one daily net settlement window each business day. And so I think that the technologies that have been proven and demonstrated in the unregulated industry in crypto are now starting to take mainstream, more regulated adoption or gain regulated adoption through stablecoins, have got a hugely compelling path to be applied into the regulated industry with a specific focus on a wholesale institutional settlement layer that could start to unblock some of the underlying constraints that we have. And if we look at the market as a whole, I think that's getting so critical, particularly with the cost of capital increasing with higher interest rates and that demand increasing from customers.
I mean, so one of the things I think that happens in our industry, especially in fintech, because everybody, well, not everybody, but I would say most people that got into the fintech thing, like 10, 15 years ago, did it because I hope, and I'm going to make the statement even if I'm wrong, their heart is in the right place, right? And they really wanted to make a difference in the world. And that leads a lot of people to this like, oh, when we talk cross-border payments, we're talking remittances. We're talking like an individual that's crossed a border to do some work and they want to send some money back to their family, something along those lines, right? I think the thing we forget often is that the world kind of is run by businesses. And I forget the exact stat, but I think it's over 90%. I think it's almost 97% of cross-border payments that are B2B, not B2C. So it sounds like what you're talking about there, right? And actually moving that huge rock of the institutional layer actually is what will lift the boats, right? Like this idea of Libra or whatever it is, and being able to send some cross-border remittances is great. Like that's the thing we need in the world. We need Wise, we need, these things. But actually moving the B2B needle sounds like it's the thing that's really going to impact the economy, actually impact the consumers in a real way, ironically.
That's absolutely correct, Zach. And I can give you more from my Asia Pacific context to help you with the numbers there.
Yeah.
If you just look at remittances outbound of Asia Pacific, the number is roughly around like 200 billion range in a payment value. But if you just look at trade flows, and I'm talking about both business, corporate trade flows, it's 8 trillion. So that's the range, right, in terms of the money that moves in out of Asia Pacific for these high value and low value business flows and corporate flows. And you're spot on that when everybody thinks about fintechs, everybody just focuses on remittance. But just look at in the last 10 years, the areas where fintechs have grown in Asia Pacific, digital wallets, they've almost become like super apps now, right? Where you can not just do P2P, you can buy stocks, you can trade, you can buy crypto, you can buy insurance. Players like Tencent, which is the Tenpay app, Alipay, have shown that it's evolved into a super app. And eventually that journey goes from that domestic payments to become cross-border. And these fintechs are always looking at growth, right? They don't want to just offer one particular service. They want to offer multiple services so that they can draw the customers. And it starts from the consumer, eventually getting into lending, right? And insurance use cases. The next phase of that starts becoming business solutions and services. We've seen that journey with the Wise, the Revolut, the Niams, etc., that have moved from that consumer into the business space. And then there are also fintechs that have directly gone and started to serve businesses. So likes of, Aspire, for example, which is one of the biggest neobanks in Asia Pacific, serving SMEs, being able to serve their payment needs, overseas collection needs. You've also seen certain fintechs or PSPs who have focused on offering solutions to marketplaces, to gig economy platforms, to make their own disbursement settlement use cases better. So you can see that these fintechs are solving for various aspects. Again, if you look at coming down to the core payments offering, the speed, the certainty, the access or the reach to markets, cost effectiveness, and making sure you get that as a one-stop shop start becoming very important for them.
Definitely. Go ahead.
I
Jeff.
definitely agree, and maybe just to add a few thoughts on that. I haven't got the stats to hand, but I think the imperative for businesses to operate globally is increasing, and I think the internet has opened this up for decades now. But global commerce is a huge opportunity and imperative for businesses and others around the world. What I would say is that the alternative means of payment, that whether that is crypto as a means of some form of value exchange, or the emergence and significant uptake of stablecoins, I think is driving the regulated industry to the imperative to enhance their capabilities, because there is a real irony when you can buy something on Amazon from overseas and it can be delivered before the money has been received by a merchant in some instances. And so
How have I never thought about that? That's so true. How have I never thought about that? Of course that's a thing. Wow.
It's a real thing. And
yeah, it's a very
people
real
have been
thing.
solving it. And so many organizations and fintechs and certainly we've been focused on solving that. And we're very proud of the performance on a card, like the fact that you can tap it and walk away, and this gives absolute certainty. But again, back to that point of as that value and demand for that increases, the mechanisms we used to use, which was parking money around the world so that we could pay somebody off the back of that, maybe before we've done a cross-border remittance in between, and not necessarily scalable in the long term. And so that need for an upgrade on the underlying infrastructure and the pipes, I think, is probably one of the most compelling areas of focus for the industry going forward.
Yeah. From your guys' perspective, is TradFi, you kind of alluded to this a little bit, but is there still competition, you think, between, again, these are like not the correct buzzwords, but we're going to overgeneralize, TradFi and DeFi? Or do you think that TradFi is starting to embrace DeFi and that the kind of sum is maybe greater than its parts sort of thing?
I think these worlds have actually come together more in the last 6 months than they have been before that. So I think if we go back sort of 6 months, maybe before the new administration in the US, I think there was a relatively significant gap between what was deemed viable in TradFi and was being demonstrated and actively getting uptake in the DeFi world, so, and everything else that comes with that. And I think for me, that came down to lots of nuanced technical considerations around whether, just to call one out, whether a regulated bank could get public unpermissioned blockchain ledgers through their third-party risk management and outsourcing. I mean, that construct was complicated and difficult, but a number of things have changed over the last few months, really. The first is the new US administration focusing on driving and enabling adoption of public unpermissioned ledgers, which is specifically called out in some of their recent legislation, and the recent Genius Act that was announced and kind of refined over the last few weeks, which is really promoting and driving that adoption of stablecoins in particular, but also enabling regulated firms to be more flexible around those capabilities. The other one is the uptick in progress from central banks and markets that are arguably trying to break their dependency on the US dollar, who are starting to be much more creative. So the announcement last year, there's been a few years in the making of the BRICS, so Brazil, Russia, India, China, and South Africa clearing system that fundamentally was pinned against a stablecoin infrastructure, I think starts to get everybody thinking about how they need to start to embrace these capabilities. And my perspective is that over the last few months in particular, we've seen a much more open dialogue around the adoption of those capabilities in that institutional regulated world than we've seen.
So now I'm curious on your APAC perspective on the TradFi, DeFi,
Yeah.
not anymore a war.
So Zach, in Asia Pacific, as you know, the regulations and in the markets are very completely like worse. There are markets which are very strict about DeFi and they don't want to encourage. Like India is very difficult, but there are also markets where the regulation is allowing for certain use cases, right? Like Singapore is a good example. There is more, I would say, also difference between consumer use cases versus business use cases. I think one thing is very clear that governments do not want the consumers to use these assets for speculative purposes, right? I think that's where they are very careful, and therefore you can see that it's a very controlled use case with a lot of limits, etc. But there is an appetite. You can see that for certain tokens, certain cryptocurrencies, as long as you work with licensed exchanges, then the government is supportive of that, but within means of not making sure that this becomes too speculative where consumers lose money. But in my view and what I have seen in the region is that there's tremendous value when it comes to certain stablecoin currencies in the business sector and the trade sector, because if you look at the traditional ways, Asia Pacific, it's a very dollar denominated trade currency, right? And it's very difficult to clear dollar. There are few certain banks that offer it. There's inefficiencies in that, and that's where in that business payment use cases, we believe that stable coins and clearing dollar with stable coins like USDC, for example, right, is something which will improve and bring efficiencies into that business payment segment. So there are partnerships that we have also done with entities like Circle, right, through which we support the settlement of such stable coins. So it allows our clients, if they have these stable coins, to be able to use that to settle for transactions over the Visa network. And we are seeing more and more of these use cases also with companies like Ripple which allows collection of stablecoins for e-commerce purposes. Aspire again allows stablecoins to be used for use cases like payroll, right? Funding of these use cases. So I think in the
Interesting.
B2B space, definitely with stablecoins, there's a massive opportunity to bring a lot of efficiency, especially in foreign currencies, which are used for trade purposes. So US dollar, USDC is quite big an opportunity.
I mean, Zach, maybe I can just add to that as well. In this formula, I entirely agree. I think what I'm really interested in is when this gets to when, for example, stablecoins get to more institutional and scaled adoption, how that plays out. And the reason I'm specifically interested in that is because I think there's a really important role of money, and the role of money in economies, and the role of money as a sovereign instrument in the markets. And if we think about this, there are really only a handful of things that continue to bear a nation's sovereign representation or flag or anything else. And those are, the flag of that country and their denomination of currency.
Mm-hmm.
And I think that has so many important considerations related to it, whether that's the stability of their economy in each market, or whether that is the control around monetary policy and foreign exchange control and so on. That the country has a real imperative to maintain and manage, and a lot of that is underpinned by what central banks refer to as the singleness of money, which is the fact that a dollar is a dollar, whether that's a dollar in the Fed, or that's a dollar in JP Morgan, or that's a dollar in any other bank in the US, and the same in every other currency. And I think the uptick and adoption of stablecoins is going to be really important to align to that dimension. I think unregulated stablecoins may face more pressure as they if they trip up on those controls. But the role of regulated stablecoins as a form of fiat that maintains the singleness of money within each denomination of currency, I think presents some huge opportunities in the market.
Smiling because, well, one, I think it's really, so when we'll go back to like getting into fintech, right? And in the US, I think it was maybe a little different, but there was this stat around, 47% of people had less than $400 in their savings account, right? That was like, we were obsessed on this like emergency savings thing, right? And I think that we've like peeled back layers of this onion to finally get to this point of like, oh, we need money to move quickly. We need people to get paid when they want to get paid. We need, or when they, earn the money in quasi real time. It's an infrastructure problem. Shit. We wasted, like 5 years on trying to put lipstick on a pig of a back end that we didn't change at all. And then we're finally getting to this place of changing the actual infrastructure and the way that money moves. And it's just fascinating to watch how that has evolved. The second reason I'm smiling is because you almost need to be a philosopher to have this conversation, or you need to at least have a full philosophical bone in your body to be able to have this conversation as like fintech continues to grow, I guess, right? Everything you just said in terms of, and every time I have a conversation about any, if it's about ether, right? And the moneyness or the moneyosity of that or not, right? It is very like philosophical in nature, and you almost need at least a bachelor's in economics or something like that to at least be able to talk about and think about some of this stuff. I'm joking, but I'm serious.
You have touched on a very real problem, and Zach, like there can be technologies that like distributed ledger technologies, stable coins, etc., that will come eventually in the future, but the problems that are there now can be solved with the current infrastructure, which is also innovating. So account, for example, there are various countries where real-time payments are evolving and domestic. We still don't have like 100% global real-time payments, but there are alternate forms, right? For example, Visa cards, wallets, etc., that are now real-time, digital native. And we have enabled a lot of such use cases, right? To the point that you made about somebody who's, let's say, an influencer or content creator or gig worker. For them, having that access to their earnings instantly and on demand is very important. In the traditional infrastructure accounts, it takes probably weeks for them to get that payment because these are small value payments, they're always built up. But with these existing infrastructure that is on the card network and the wallet infrastructure, we have developed use cases, we have developed the product capabilities to serve these needs. So we have live programs where, for example, drivers, they can, on the click of a button, get access to their earnings. Content creators can now get faster access to the small value, like $50, $100 payments, and even in a cross-border, which would have been very difficult to do with the traditional account infrastructure.
That's a game changer.
Game changer, and that's with the innovation that's happening already with the wallet infrastructure, the card infrastructure. And as a network, what we have done is we have kind of built that fabric as well that develops that interoperability so that somebody who uses our network doesn't have to worry about, hey, well, how does this infrastructure work? Or do I have to do things differently? Giving that simplified access and making sure that all the complexities of it are solved by us. That is what is now enabling these use cases using the current infrastructure. And we see huge growth happening where wallets, cards are becoming now mainstream credentials and ways of moving money. And a lot of those inefficiencies that were there in the small value payments, which had to be fast, cost effective, are solved by this card infrastructure.
Can you unpack that a little more? And both of you, I guess, in terms of the infrastructure piece. So you have a card that is on the RTP rails. Is it the card itself, or is it the fact that you've built the infrastructure and it's like just a regular card and then it goes into this specific rail? How does unpack that for this not payments expert?
Sure. So I can go for it. So, what we have done, Zach, in the last years is probably 5 over plus years is really accelerated a lot of technology as well as enablement with our clients who issue cards to make those cards as real-time instruments to receive money. So if you, for example, can go to a Revolut app, you have the option of sending money to a card, and that money arrives into your account, which is tied to that card, could be a current account or a savings account, in minutes, and actually sometimes even in seconds, right? So this network is we have invested heavily to grow this network. Today, there are multiple programs that are now leveraging that network. For example, I have a colleague who is working in Singapore from South Africa. As you know, South Africa still does not have a real-time payment system. The traditional bank transfer takes, like, for example, at least 3 to 5 days on the SWIFT network. But using one of the largest banks here, which has enabled that card endpoint in South Africa, now my colleague is able to remit back the savings instantly using the card leverage. So it has opened access to so many markets which did not have that real-time infrastructure. And because we are a large network, we bring in those economies of scale. So the costs at which we move that money is much, much, much lower, I can tell, from the traditional SWIFT and the cross-border TT rates. And it's agnostic to the value. Like, you could move high value, you could move low value, right? So that's the beauty of it. And it's ubiquitous experience because that same card works whether you want to send it to South Africa, whether you want to send it into Singapore, whether you want to send it into Europe. It's the same card number that enables that money movement.
That's fascinating. Go ahead, Tim.
And so, Zach, that's really the journey that we've been on with our Visa Direct products, which started, I think, more than 10 years ago now, where we started with the premise of trying to effectively reverse the consumer purchase rail, where you're paying with a card to a merchant, and to be able to reverse that so you could put funds onto a card, which is effectively synonymous with an account. And then through...
Can I stop you right there, actually? I think a lot of people associate that as moving, just pressing a different button. I would imagine that encompassed a significant amount of engineering time and compliance time. That in and of itself, that quick sentence you just said was, I imagine, not very easy.
It was not easy at all. And I certainly can't take any credit for the work that went into doing that, but not easy at all. And there are a large number of money laundering, anti-money laundering, compliance and regulatory considerations, as well as the enablement that we've gone through with what we call issuers, but the banks who ultimately are there with the customers with cards, and that ecosystem, as well as the performance and the underlying capabilities that underpin that, and then make it accessible to customers, which is an ongoing journey. But that accessibility comes into the likes of alias credential directories that allow us to be able to associate those card details with a phone number or another instrument, so that you can more easily process that push payments. We call it push to card. It sounds really simple, but that reversal.
That's why I stopped you. Is it sounds simple? It's not.
Yeah, yeah, and it continues to be an enormous focus to maintain that, to enable that, to scale that, to make sure it's interoperable, and to ensure that we're delivering a service that we think is hugely competitive. And then the journey we've then been on is to extend that capability to try and accommodate the broader range of ways that people seek to be paid or to pay. And so through a series of acquisitions and then internal developments and builds, we've added on to that capability with the ability to push money to an account anywhere in the world, and also to be able to push money onto a wallet, as Swapnil was saying, so that we've got that, those form factors, and we're actively exploring other form factors and formats of money that could sit on those rails. But ultimately, we've got this network now that through that alias credential and a single front end can allow a customer through an intermediary to push funds to any card, any wallet, any account in the world that's on our network. And I think it's been an enormous investment, but it's a huge focus to try and maintain that and ensure that it stays really competitive.
Yeah. So Swapnil, you mentioned Revolut before. I'm curious how much of this, I mean, you guys are obviously doing a lot, and it's not a small company, so there's a lot happening all the time. But I'm curious on your innovation practice, quote unquote. How much do you think about, or not how much do you think about, how much of the innovation is driven kind of internally, right? Just seeing, well, we need money to move faster. Let's figure out how to make money move faster. And that's my daily remit versus, or coupled with having these partnerships with the Revoluts, with the, all of the kind of major fintech players out there. How much is your kind of innovation practice being driven by those partners' needs versus just what you're seeing in the market and your own kind of vision, I guess, as a company?
I would say almost 100%, Zach, is driven by partners and clients. In fact, fintechs have played a huge role in helping us also innovate on our capabilities, right? A lot of the innovation that we have done, for example, we were earlier talking about stable coins as settlement currencies. It also happened because of a fintech who wanted to use that as a settlement currency with us. So to answer your question, 100% of that has been with our partners, and we go through a co-creation journey with them. We pilot our products with them and eventually also commercialize in partnership with them.
How much of the compliance conversation is interesting as far as that goes, Tim? Because I imagine if you were driving that internally, the ability to have a closed loop or whatever it is probably is a little easier in some of those conversations versus some of the stuff I imagine the fintech companies are pushing you to build is maybe outside of your normal compliance contract, whatever that would be. Not that it's non-compliant, it's just outside of it's new, right? So I'm curious what that goes.
I mean, I have maybe a funny take on the compliance side, because I think that the regulation that's in the market is actually an opportunity. And if we think about, I always think it's important to actually turn what people regard as regulatory pressure around us, turn it the other way around. Regulators are there, and I would argue are on the same side as the regulated firms that operate in markets. And regulators are there really to set a minimum acceptable standards of trust and certainty and control and protection for consumers and businesses that are using services that they deem regulated. And I think the onus and opportunity on the firms that operate and are regulated is really to say that's the baseline. Mm-hmm. We need to exceed that and extend that and do better than that to be competitive. Of course, fragmentation and different standards, whether that's sanction screening obligations or whether that's the different controls and imperatives that get really technical.
Yep.
And as a non-bank, how long, our participation in the market, whether that's connecting to an RTP, whether we can do that or not, whether that's the ability to open and operate a virtual account on behalf of one of our customers and for their customers. There are so many differences around the world that play out on that, which makes it complicated, but also provides, I believe, a framework for companies that are trying to be more innovative to kind of lean in on that. But I don't see from where I sit anyway, I don't see the compliance obligations as a hurdle. I just see them as a baseline. I mean, if we're not meeting those, we shouldn't be operating in the markets that we're seeking to operate in.
That is accurate. And also, I mean, constraints create innovation, right? At the end of the day. And I think that's
exactly
why finance and fintech and payments and all of it's so interesting is, you kind of do have, you know, I don't know if like both your hands tied behind your back is the right way to describe it, but maybe like, you know, you got your pinkies tied together, you still got to type or something, and then, you know, just move a little bit slower, make sure that you're actually doing the right thing for consumers and businesses and safety and soundness.
Exactly. But I think what is important is to have the dialogue. So, I mean, I think sometimes I've been in firms in the past where the regulator is sort of seen as this arm's length body that you mustn't touch and go near and talk to. But actually, I think our approach within Visa suddenly is that, you know, if we're trying to do something, the earlier we can talk to the regulator, the better, and engage them on how we could do that. And if we think that it's you know, got any considerations relative to what the letter of the law is, then we open that up early and validate our understanding. And if it's not possible, we understand why it's not possible. But I think, and we do that as well with our partners. So often our partners will come to us with ideas that are, you know, not something that we do today. And one of the first things we try and do is to go and talk to the regulator and understand if they would be supportive. It's rare to get a supportive response, but if they would be accepting of that as a posture that we want to take.
Yeah, it's interesting. I mean, speaking, we've come back to this point a few times, but how the world of fintech has grown and changed over the last, 10, 15 years. At the beginning of this, the really early bank partners, I think, or even just before the first fintech partnership happened, I think the idea of seeing a regulator on the street, that you knew was part of an examination team or something, you're like, oh, put the hat on, go to the other side of the street, kind of run away a little bit, and not run away, but if we don't have to have that conversation, maybe we don't have it, right? And now I think that's shifted where the conversation is happening earlier, the openness of regulators to learn and think and get involved in this. It seems like it really is an ecosystem now, right? Regulators' doors are at least open for you to have that conversation. Non-banks, banks, fintech companies, all are mostly welcome to have that conversation, even if they've only raised, $1 or something, and they're just kind of going down that road. So it's a cool shift.
Yeah. I mean, just to add two, and sorry, I'll just really add two things very quickly. Regulators around the world have been opening up sandboxes. We've got the STA sandbox here in the UK, and that's a phenomenal framework. But they're also engaging actively on innovation. So I mentioned the Bank of International Settlements project Agora earlier, and that's got 7 central banks that are actively participating. And we've got the Fed Reserve and their innovation center around the table on actively engaging and thinking with the private sector on what the future could look like. And I think that's a step change from where we were not too many years ago.
Yeah, so I was just going to add there, Zach, you also asked about how do we do this innovation within the boundaries of regulation, right?
Mm-hmm.
And the point like Tim made is that regulators are open to such innovation and they want fintechs to come at the forefront because they know that the fintechs are the ones who are going to make it better for their economies, make it better for the consumers and the businesses in the country. But they want to have oversight. And that's where, there are these regulatory sandboxes, or you need to go for every approval of a new model or a solution going to do. But what works in our favor is that we have established ourselves as a very trusted and secure brand.
Mm-hmm.
So if you ask, like, what is one of the companies that is known for its strong compliance and ethics, it's, without doubt, Visa. And when we go with our partners for these approvals or these sandboxes, it builds that credibility with the regulator that, this particular fintech is working with an entity like Visa. So it builds that confidence also with the regulator to allow for these sandboxes, co-creation, and test out these products. So in many markets, like for example, if you look at India, we have actually gone together with our partner, gotten approvals from the regulators, and today those have become mainstream use cases. There are similar, opportunities in Thailand, for example, where the regulator requires everything to be done in a sandbox before it goes live.
Mm-hmm.
If you look at, like, for example, QR payments that have flourished, where Visa is also accepted, we did with a lot of fintechs in those markets. We showed the power of that solutions that these fintechs can become mainstream payment instruments in addition to the bank apps because they're working with a very secure network like Visa. And that also helps the fintech to build that trust, etc. as they offer that solution to the users that, hey, this is with the Visa Trusted Network, for example, through which you're making the payments. So that relies a lot on the Visa's security, authentication measures, etc. So it allows these fintechs to grow and scale with the right partner because that brings the trust into their services from the consumers and the governments.
So let's kind of close on that piece. How does a startup engage with you all? Kind of what are the best ways to start that conversation, if they're wanting to have that partnership that you're talking about, Swapnil?
Okay, so I can give you, how we do it in Asia Pacific. One is, we run a lot of forums where there is an innovation agenda. So we run hackathons, we throw problems out in the industry and say, okay, let's bring players and see whether they can solve for this problem. So a lot of ideas come out of those hackathons. The themes are very simple, right? Like how do we, for example, develop financial inclusion in Philippines? How do we enable, for example, a stable coin or a crypto use case within a business payment? And we throw these problems out in the industry where fintechs, startups can come, pitch ideas. And from there, we will look at opportunities where we see that, okay, this tech or this unique proposition that a fintech brings is real, it's scalable. And then we work with them to do MVPs, pilot it out with certain clients. So that's typically one of the approach. The other ways is as we work with some of the larger names, like I spoke about, Aspire, Revolut, they themselves are also very ambitious and have new ideas. Like, okay, I want to grow in following segment. Can Visa help me here? So that's another way where we partner with such clients to look at how can we evolve our own solutions and propositions to support and suit their use cases. So we've got both like inorganic and organic, if I were to use that, ways of doing.
Makes sense. Tim, any additions from the EU side of things, maybe?
Yeah, I mean, I think again, I think I've said the same thing a few times, which is how much stuff has changed. But I think as a company within Visa, we have a huge focus on fintechs, and the Fintech Accelerator program that we run here is an opportunity for us to partner with fintechs, be on their journey with them. But we are, much more embracing than we have been in the past around how we can allow them to connect in, support them in connecting in, and then help to grow their businesses. And it's been a big focus that continues to be a big focus. And we're really proud of the role that we played in so many of those instances where we've been able to partner with fintechs, and they do hugely up our game. It was only about 6 or so years ago, I think, that a fintech came to us and said, look, to connect into your network, I need to commission a data center. I need to have these complex hardware security modules and all of these requirements. And it was that ask, back to Swapnil's points around innovation, that in a matter of months, we pivoted all of that to get a pure native cloud connectivity model into our networks, which was something we hadn't done before. And it was led entirely by the demand from a fintech and is now actively used by both large institutional banks through the small fintechs. But it sounds easy, but that change to, change the mechanisms and requirements and connectivity structures was led by fintechs, and I think is a great example of how we've tried to lower that barrier of engagement.
I love it. Okay, so I do have one final question, and then we'll close here. So both of you been in and around payments for over a decade. You both have deep experience in this industry, coming from different directions, but deep experience. And we started with, payments maybe wasn't looked at as the coolest thing on earth maybe a decade ago, but now, as you said, Tim, I think it was, more has changed in the last 5 years than the last 50. How do you two stay abreast of these changes, right? How do you learn, and how do you stay on top of all this? Because I imagine you have full inboxes. I imagine you have pretty full days. How do you actually, are you reading? Are you listening? Are you just talking to people? Like, how do you take in this new information and even develop an opinion on the future? Whoever wants to go.
I can jump in. I mean, I think you talked earlier about being a sort of a prophet, and I have to say that I have lost count of the number of times that I've been wrong. So the number of times that I've been wrong about what's going to happen next in the last few years, I've been countless times. I just am continuously wrong about it. And we talked about stablecoins quite a lot. I would have never imagined that something like USDT or USDC in the model that they've been set up on would get the growth that they've got. No clear off ramp, no interest payments, an unregulated firm, and they've absolutely flown, and it's phenomenal what they've done. And so I think I probably learned from what I get wrong. So when I sort of say to somebody a prediction or something and then it's proven wrong, I find that really really helpful. And it sticks with you. It definitely sticks with you because you feel guilty for recommending something that played out in the other way. There's no way to read everything, but I think just surrounding yourself by people internally and externally who live and breathe this world is a privilege that I feel that I have the opportunity to do every day with both my colleagues and those who I work with in the industry. And I'm learning every day. I mean, I think my reflection is, as one of my colleagues said to me recently, every day is a school day.
Mhm.
And that couldn't be more true.
Swapnil, what's your 2 cents?
So in my case, Zach, coming from a product background, I'd see that this is like very core to everything that I do here. Is I always think that as a product person, the payment, like I said, problems are always the same. It's just that the solutions and how we solve them keeps evolving and keeps getting better. So for me, it's like I'm in this constant pursuit of how can we solve these problems better. And very similar to what Tim said, connecting with the like-minded people who are looking at solving those problems more in the fintech space, because they're really looking at, they're very passionate about how they improve. Listening, I would say, to your customers, because sometimes there may be an opportunity, there may be something behind that they're saying, which you identify that, hey, this is something that can be better. And then looking at what are the different solutions, what's happening in the industry, and how can we solve this problem. So I think one is just having that natural passion, bouncing off and discussing with folks. But I would say the most important would be like listening to what a customer is saying beyond like what their problems are, and then trying to find those opportunities.
It's funny. I ask this question sometimes, and it's pretty like I'll occasionally get podcasting, I'll occasionally get, this and that. But the consistent one is I talk to other people that have the time to develop that opinion, and then I stress test their opinion and their perspective. And, so yeah.
The obvious answer is everything is fintech podcast is the main.
Well, that is the correct answer, Tim. Yes.
How did we miss it?
Exactly. That was the softball that I was throwing. I was just waiting to see who was going to hit it.
Yeah.
Well, we'll have to check in down the line, see how things are going, see what new technologies we've talked about here are actually live in the world. So thank you both for your time. This has been a blast, and we'll do a check-in soon.
Thank you so much, Zach.
Thank you. Our pleasure.
Thank you, Swapnil. Thank you, Tim.